there's actually a lot of risks associated with carbon credits in lots of parts of the value chain. And insurance is really, really good at understanding risk and can sort of give that market a boost and help it scale its impact by becoming a risk mitigation solution that will help more capital flow in, buy more carbon credits, fund more carbon projects, and ultimately help the world decarbonize. I'm Yaron Ben-Zvi. I'm Chief Operating Officer at ACA, the carbon insurance company, and this is the future of insurance.
Yaron, it's great to sit down with you again, and you are a first for me. I've had some repeat guests, but I've never had repeat guests who are doing something different than the first time. So very interesting, and I'll link to the first episode so people can catch up on your backstory, but welcome back to the show.
It's great to be with you. Thanks for having me again, and you just gave me a nice boost to my ego because I love being first. So
nice.
Really
There's both tremendous pressure to get it right for the sake of all future second timers who are doing something different, but also there's no bar set, so you can.
Fair enough.
It's only a personal record. So tell us a little bit, like super quick on you, but then tell us about what you're doing right now.
Yeah. So the last time you and I sat down, I had been building a company called Haven Life, which was the online term life insurance player, and had done that for several years. And decided I wanted to leave it and build something new again. And one of the things that I was really interested in doing was continuing to use insurance in really positive ways for the world and solving great problems. And so I had this crazy thought in my head, which was, how could I combine insurance and climate? And started just talking to lots of people. The first reaction was, you're crazy to move from life to P&C. Nobody does that.
I told you the opposite.
Except for you, Brian. I literally think you were the only one who was like,
P&C is that's the hot part. Yeah, absolutely.
You were like, it's going to be so exciting for you to go into this direction. And so I really appreciated that, by the way. So I started having lots of conversations and was lucky enough to meet a gentleman by the name Chris Slater, who's the CEO here at ACA, who really started to teach me all about the carbon markets and how he's an insurance executive, very accomplished, and he told me how insurance could make a big difference for climate, and started to really buy into what they were doing here at ACA. So joined, and since then have been working to help build that company.
I think it's worth for listeners or folks watching this real quick, like, what is the carbon market? What is that about? And then I think for a lot of people, I've seen you talk about this, so I have a sense of how does insurance fit in, but maybe giving that kind of high level is like, what's insurable about it? What does that mean from an insurance product standpoint as well?
Yeah. So at high level, what we're doing at ACA is we're really building, I would say, the first insurer that's completely focused on carbon. Our goal is basically to insure the risks associated with kind of climate change as we transition. And the way that we're really focused on doing that is through the carbon markets. The carbon markets are basically carbon credits or carbon offsets, you may have heard them called. So think like a big corporate makes climate commitments and sets targets for itself in its decarbonization strategy. One way they pursue that climate commitment is by decarbonizing their various activities. Another way is through carbon credits and carbon offsets, where they effectively buy a credit, and the dollars associated with that credit go to funding either the removal or the avoidance of carbon somewhere else in the world. And so it becomes part of their decarbonization strategy. And that's a huge and growing market as climate becomes a bigger and bigger problem. So the insight Chris and team had was that there's actually a lot of risks associated with carbon credits in lots of parts of the value chain. And insurance is really, really good at understanding risk and can sort of give that market a boost and help it scale its impact by becoming a risk mitigation solution that will help more capital flow in, buy more carbon credits, fund more carbon projects, and ultimately help the climate, help the world decarbonize.
So I do wish I had just recorded the talk you gave the other day, because you went through those risks, and some of them I was like, yeah, I get that. And others I was like, I never would have thought about that risk. And now I'd be too scared to transact in the space because it is there's actually quite a few risks involved here. And so I know it's the point of you presenting that, like, on the back of it, I was like, I would never do one of these projects on either side of the credits without having coverage because the risks are quite real. And this isn't me trying to sell it. It was like, no, this is a real issue. So what are some of the risks that are at play in these transactions really, or these projects?
Yeah, it's fascinating. And it's one of those things when you see like a new market develop, you realize how critical insurance is to any market and how much we
Yeah.
take it for granted in every part of our lives.
Yeah.
And then you see like what happens when it's not there, and it's clear what the stresses are. And
Yeah.
so let's take the carbon markets, right? There's a whole series of risks. We are really focused on what we call post-issuance risks. So think a company buys a carbon credit. That carbon credit, we can imagine, is linked to a forest in Canada that actually captured a ton of carbon, right? So the carbon credit represents a ton of carbon that's in a tree in a Canadian forest. The first thing that you might ask is, okay, great. What happens if that forest burns down? Well, the carbon gets re-released into the atmosphere, and basically that means that carbon credit that you had isn't actually representing the removal of 1 ton of carbon.
Yeah.
There's other what we call reversal risks, like it could be illegal logging, basically anything that lets the carbon that was captured back into the atmosphere
Yeah.
um, could happen, and that's across a broad range of projects. That could be nature-based, that could be technology-based, and so forth. So that's one of the main types of risks is reversals.
Yeah.
And then the other risk is what we call sort of invalidation risks. There's lots of different names, but think of it as really just the risks associated with the methodologies that were used to create that carbon credit. So one example would be is like when a project developer went to create the carbon credit, they had to do all this stuff, whether that's plant a tree or change how they're doing their farming for soil capture carbon. They had to do a bunch of things. If there was fraud in the way that was done, if they
Mhm.
miscounted like what the baselines were against which the carbon credit is being measured, a whole series of risks that basically may lead to a third party saying, well, hold on, that's actually not worth the ton of carbon that you say
Yeah.
it's worth. So those are the kinds of things that we're really here to try to help give buyers confidence in, to try to shore up both quality in the market and scalability.
So I'm fighting the urge right now to ask you all these like technical questions about the projects and the ways that the risks evolve. And I want to step away from my desire in that to dig into the business itself. So you're about 9 months in. You personally, I know the business was here a little bit longer, but it's relatively new. Certainly in insurance scale, not even new. Like it's pre-new. Startup scale, it's super old. A
Yeah.
couple of years, 3 years, something like that, right?
Yeah.
So yeah. So where are you at in that journey? And I'd be curious, like what's changed? What are you focused on? How have you had to pivot and evolve? And what do you see is the issue that you're mostly addressing today and thinking about for what's next?
Yeah, yeah. No, it's a great question. So, and just to be clear on the timing, so the business was started by Chris and team really at the very start of last year is when they got it up off the ground. I joined in at the end of July or so, and
Okay.
really, I think we've done an amazing amount in a short period of time. So,
Yeah.
as you know, Brian, we basically launched our own syndicate out of Lloyd, so our own insurer.
I can't
Uh,
get over how quickly you guys have achieved this. Like it does blow me away. So you have a syndicate.
we do. We have a Lloyd syndicate. They've been great partners, and in that time, we built not only capacity with some great partners, but also a platform with some great software and a great team. And so, broadly, I think for your show, as you think about the future of insurance, I can say it is possible to launch an insurer in a year with a team of 7 people and the right partners.
In a from scratch space. So one of the things I've always appreciated is you can do a Me Too filing and just like get up and running. Or if you have a syndicate, you can much more easily set up another one. But you're doing all these things de novo, and it's not like there were 70 other players in the space that you could just copy what they did or just hire in their folks. Like So yeah, anytime people are like, well, we can't do this, that's impossible. I'm gonna be using you as an example.
We'd love to be that example. And definitely, I mean, look, um, I think it helps that, Chris and some of the other members of the team here on the board, they know insurance, they know the players, we know how to talk to risk and sort of capital partners and reinsurance partners and all that stuff. So I think we're able to kind of move quickly, but there's definitely a lot of education, right? Because we're at its core, I would say we're a lot of insurance people who are coming to the world of climate, and we have to now educate the rest of the insurance world
Yeah,
about the world of the carbon markets. And so
yeah.
that's definitely been a sort of valuable piece of the what we bring, I think.
So what is it that you end up addressing mostly? Because as an outsider, I see a lot of movement in, I'm thinking a lot about like EV adoption, which I know is not the same thing, but I also know that's part of how Tesla funded themselves for a long time was selling their credits, different kinds of credits, but credits. And then, the
Yeah.
political climate has been very fluid and aggressive in a lot of, moving strongly left, strongly right, standards are set, timelines are set, and then there's an election and everything is thrown out. Like it seems like it's an immensely fluid and whipsaw kind of space that you're in. Is that what you're finding?
It's definitely a fast moving space, and it's changing dramatically. I mean, if you look at the carbon markets, it's really been divided into kind of simplistically into voluntary markets and compliance markets, right?
Okay.
So just for those who are new to the space, voluntary would mean places where it's not mandated for companies to buy, but they're doing it because they're setting these commitments internally. There's desire from shareholders, employees, customers for them to be making progress against these commitments.
Yeah.
And so they're voluntarily buying. Compliance markets, on the other hand, are places where globally there's markets like California, places in Canada where basically if you're an emitter of carbon, you're required to actually do something about that. And part of that is buying carbon credits as well.
Yeah.
So those are kind of the two markets, and they're both sort of dramatically changing in different ways. Just to
Yeah.
give an example, up until recently, the SEC has been talking about climate disclosures and requiring just climate disclosures as part of its as part of a public company's annual reporting. And they kept delaying it. They put out sort of their guidance, I think, earlier this year, and we're going to adapt it. And now they backed off of it, right?
Yeah.
So in the
Yeah.
period of a year, we thought it was going to be one thing. It was something scaled back, and now it's something that's on pause
Yeah.
uh, a little bit, sort of indefinitely. So things are changing rapidly in the marketplace. I think that being said, our hypothesis and kind of the business really relies on the fact that ultimately these markets are going to grow. There's no question. And the reason they're going to grow is because they have to. There's no scenario where the climate targets that have been set through the Paris Accords and that sort of various nations are setting can be reached without the carbon markets being a substantial part of the mix. And it's not a silver bullet by any means, but no
Yeah.
one thing is. And it's
Yeah.
certainly going to be part of the climate solution. So our view is we're really in the space to be that sort of risk mitigation solution as those markets evolve and mature.
So I understand the involuntary and voluntary side of it, but then there's also the sort of the buyer and the seller of the credits. Who is it that gets the insurance, or who is driving the adoption of the sense of like we need to protect this transaction? Because
Yeah.
what you described initially sounded like it's very buyer driven. We have to make sure we get the thing that we signed up for. But is that the case, or is it different?
So it's turning out to be a mix of both, I would say. And it's one of the things that we were kind of surprised by as we came to market. So there's definitely buyers who are sort of talking about risk and worried about risk, especially as you look at, certain projects that might be new types of projects that they're
Mm,
not as comfortable with. Maybe they haven't been as around as long, or they're new to those particular buyers.
yeah.
That's definitely one profile that we see. Just to give you an example, biochar, though the methodology biochar is kind of this process where, and now I'm getting all technical on you, but it's where you can kind of capture carbon out of sort of natural waste and have it be through pyrolysis sort of buried underground, and it's a very kind of natural, long duration carbon capture and storage approach. So in some ways, people have been doing it for hundreds of years, but the carbon markets, it's new to the carbon markets. And so companies are getting comfortable with it. And so as a result, we've seen some buyers who say, yeah, I want to buy credits from these, but it'd be great if they'd be insured, right? Because they're kind of new and they're out there. And so that's one place where we're seeing appetite and customers. Another place is, quite frankly, from developers and sellers of credits. So the actual projects and the people who will put these projects together are interested in buying it. And that's especially true in some of the compliance markets. So we see as compliance markets are emerging, there's actual kind of recourse to, developers of projects, of carbon projects, if they get it wrong or if something happens. And so they want the insurance to, protect themselves, quite frankly, in case something changes and they need to make good on various parts of their projects.
I know we're getting closer on time, but there's something you said around like this was going to happen because it has to. Is there an end to this? Is this like a temporal need? And then, I mean, I don't believe we're ever going to get to a place where like climate's totally fine and we fixed everything and no one needs to worry anymore. But is there a place where there was a spike in the need and then it's less necessary? And maybe it's like 200 years from now, and assuming the Earth's still around. Or is it that it's not just about carbon, we think about ESG more broadly, and right now it's an E kind of question, but there's still an S and a G, and there's risk around that. And maybe there's credits and markets that develop. There's like, what's the long-term vision for you in this kind of space? Is really not just a carbon question, but is it a focused carbon question? I know that's in your name. Or is this about something different long-term?
I do think we are focused on the carbon aspect of it now. Now, I think your question's a great one because ultimately, if we and everyone else does our job, the need for the carbon markets goes away eventually, and that would be a fantastic outcome.
Yeah.
I don't think that's my lifetime or probably even my kid's lifetime, to be honest. Although it would be wonderful if that were the case.
Yeah.
I think the market is going to grow tremendously for a very long time because we need it to. And then if we do our job right, we've transitioned into a different kind of society and economy that is decarbonized.
Yeah.
And I think out of that, I know that as a business, there'll be other opportunities that develop because the technologies will be mature.
Yeah.
And the economics of these technologies will be mature. And those present even more and interesting insurable risks for us, and in some ways more predictable ones as well.
I mean, that's sort of what I'm wondering is almost like the original insurance for, like merchants shipping things across oceans is what you're creating actually a mechanism and a market really. And it's applied to carbon, and that could either be short-lived, and short, I think, is probably hundreds of years. Or it may continue on in perpetuity like marine insurance and cargo insurance has. But then there's analogs that develop around that are thematically similar and using the same sort of platform. But like I said, like maybe it's E and then it moves into the S and the G, or it's something else entirely. But it feels like through the carbon development, you may actually be creating almost like the Gen 2 economy that insurance ends up being there for. To save the planet, no pressure.
Yeah. I mean, that's certainly our mission and our dream. And we believe it, right? Because it's one of those things where, we truly think that insurance can be the important unlock.
Yeah.
And not to not to kind of pat the industry on the back, us all, but I do think, I was having this conversation at the conference that you and I were at the other day where somebody said to me, I sat down and counted the number of insurance policies I have in my life in some way,
Yeah.
and came out with about 25. And I was like, that's crazy. That's ridiculous. Nobody has 25 insurance. And then you start to think about it and you're like, it's in everything that you do. And, there is this kind of traditional carbon economy that has been well insured. And to your point, I think this is like, we're at a transition point, hopefully to a decarbonized economy. But as that new economy emerges, there's a whole set of other opportunities that come out of that. We just need to start to think about them differently and understand the data that will let us insure them effectively.
Yeah. So that's well said and a good spot to end on. And I think you just lost the whole audience because now they're counting. They're like, okay, I got this one, I got this one. Because that's what I just ended up doing. Yaron, it's really good to sit down with you again. And I'm so glad that you listened to me and we're not shied away from pushing into PNC, which is a much better space to be in than life insurance. Obviously, we're very happy to have you on this side of the equation.
It's great to be here with you, and it's always great to spend time with you, and just so appreciate what you're doing with the podcast and the PLRB both.
Thank you.
So it's wonderful to spend time.
Cool. Yaron, thanks again for being on. Thank you to Yaron for coming back on the show. Different context this time. He's a great guest, and he's going to do some really cool things. I'm just glad he's doing them on the PNC side now. Not intentionally knocking anyone in life, just having some fun with it. But it is really actually a much bigger deal than just what they built specifically at ACA. Thinking more broadly about what's at stake here. And this is such a really hitting the nail on the head moment where, I talk about the importance of insurance and how nothing happens in the world without insurance underneath it. That's true of the carbon market now. And it's the risks in it could stop it from functioning. So, that's a prime example of why you need insurance underlying economic activity in the world. But now we're talking about something that's that much more critical because of what's at stake. Not to say that food production isn't important. And so, agricultural related and shipping related coverages are important, but this is like the existence of the planet ultimately. So when you start talking about what's going on with climate change and trying to change the situation so that we can continue to live on this planet, that's an even more profound kind of statement about what's at stake here and why having insurance behind the scenes so these things can take place is that much more critical. It's not just about enabling economic activity. It's economic activity that ultimately can enable life. Really, really important. Lots of things we do are important. This one just taking on a little bit more of an existential point for me, at least. And I do think it's really fascinating if you look at what is it that they're enabling? What is the mechanism to do that? And as more of these moments, like in the carbon space or the environmental space, more of these moments start to emerge, do we have analogs in other sort of, change the world for the sustainability of it long term kind of issues? Thinking about ESG as a whole, ACA could be onto something that is much bigger than just carbon or just the E in ESG. There's a lot to that. And I know it's political, and I know that some people are probably sitting here thinking like, oh, that's nonsense, or I don't want any more of the CSG, or that's just noise, or whatever. The reality is, and I think everyone in insurance understands this, the E is about as real as it gets. Climate change is absolutely real. You cannot discuss that. You cannot argue against that if you work in this industry, because we see it every single day. Even if you're not in the lines of business that are directly affected by, hurricanes and drought and wildfire and flooding and all the other extreme weather related losses that we have to deal with, I promise you, every single line of business is touched by them because it affects reinsurance, it affects capital capacity, It affects claims capacity. It affects vendor capacity. It affects supply chains, everything. So you cannot get away from the reality of the climate risk. That means you can't get away from the reality of the carbon market that ACA is focused on. And that's why this stuff, I think for all of us in this industry, if we set aside our political leanings, we can at least come together and say, you know what? This is actually happening. We're definitely affected by it, and we need to accept that and figure out how to make it workable. So I commend the team at ACA for doing that. Whether you agree with the politics or not, doesn't matter. The losses are the losses, and that's what we need to deal with. The risks are the risks. That's what our industry exists for. So I think that resonates or can resonate with everybody if you allow it to. So with that, I will leave you for this episode and hopefully come back for more. You can always subscribe on whatever platform you're listening to this on. If you're on YouTube, hit the subscribe button, hit the like button while you're at it, hit the bell so you get notifications. If you're on Apple Music, listening to podcasts on Apple Podcasts, Spotify, whatever platform, subscribe or follow the show, like it. But most importantly, tell someone else about it. If we spread these ideas, if we get more people engaged in it, whether we agree or disagree, we push this industry forward in ways that we need to. We get new ideas, new thinking, new people engaged in the future of this industry, which I think we can all agree is pretty exciting. So till next time, share the show, tell people about it, and I will see you back. Thanks, everyone.